Okay, everybody, it is me, Gregory Mannarino. It is Tuesday. Lovely day. June 7th, 2022. I'm laughing. You know why I'm laughing? Because it just continues to just not stop. We got a warning from Target today, which is plummeting pre-market, explaining that the consumer is weak. Oh, really? How about, can I get a duh? Despite the fact that we're told repeatedly how great our economy is doing and we're booming. Okay, we get a warning from Morgan Stanley on the global economy explaining that, well, guess what? How about another duh? The global economy is contracting. As a matter of fact, you all know this. I've told you about this phenomenon of the global economy contracting. I don't know how long. I've explained to you, not only is it contracting, it's contracting at its fastest pace ever. But you're not allowed to know that either. It's just, I'm laughing. Again, it's unfreaking believable. But that's the story. So let's see. The consumer is weak. Oh, really? Imagine my shock here. And we get yet another warning from Morgan Stanley that the global economy frankly sucks. Imagine my surprise there too. It's impossible to make this stuff up. All right, people. Oh yeah, before I forget, the CDC, I'm laughing again, has now issued a monkeypox alert. Oh yeah, so make sure you get afraid of everything that's going on. They want people paralyzed with fear. Monkeypox. Make it up. Make any of this shit up. So on the back of this here, we got stock futures down about 1% respectively across the board. NASDAQ futures down about 1.25%. Dow futures down about 0.8%. S&P 500 futures down about the same. All right. Honestly, the setup for the market is not good this morning. We got a couple of things going on. You got a stronger dollar, the comparative strength, or as you all know, relative strength, compared against the weight against other currencies is stronger. Market doesn't like that. Crude oil, actually, despite the fact that this Saudi Arabia, imagine my surprise here, is going to be raising prices. Crude is under a little pressure, not much. We're still over $118 a barrel, people, when we're talking about WTI. It's out of control, and on the back of that, you can expect inflation to go crazy. Natural gas absolutely surging here. All right, so for the setup for the market, going back to that, not great. 10-year yield above 3, okay, that's where it's supposed to be. I think the 10-year yield is going to settle much higher than this with, 3.2, 3.25, unless, of course, something else happens here. But we're going to keep our eyes on that. I think we all have a clear picture of what is going on here. So that's really the setup for the market today. It's not great. The comparative strength of the dollar, the market doesn't like that. Crude oil, even under a little pressure, the market doesn't like that either. The U.S. dollar here being stronger. Okay, what else is going on? Let's go over to gold and silver. Gold right now relatively flat. You got silver under a little bit of pressure. People, look, when it comes to gold and silver, and you know this already, but I'm just going to tell you, there is no real price discovery mechanism. As a matter of fact, I'm going to tell you this. I've said this a million times. You want to look at the entire market. There still is no real price discovery mechanism here. The distortions that exist right now across the spectrum, the entire spectrum of asset classes is off the Richter scale. Nothing makes sense anymore. And the stock market is in a massive bubble. There's no doubt about it. It's the biggest stock market bubble that we've ever seen in the history of the world, being propped up on the back of a debt bubble, which is going to balloon even further. There's just no doubt about that. And I think you are all well aware of it. So just expect these things to happen. Keep your eyes on the debt market. Keep your eye on the MMRI, Mannarino Market Risk Indicator. We got a pretty big jump in the MMRI, which is a risk indicator. It is not a crash indicator. Okay, I continue to get this. It's not a crash indicator. It measures risk in the equity market based upon action in the debt market. Anyone can look at this. It's 100% free right on my website, traderschoice.net, with my chat room and all kinds of free stuff for all of you. I hope you take advantage of it. So anyway, that's the story this morning. More absolute, complete, utter, total insanity. I wonder how they're going to cover this up today. Again, what have we been told? Our economy is great. Couldn't be better. We're booming. And everyone is rich. Oh, okay. Well, let's see. So Target is saying the polar opposite. And again, Target is absolutely cratering. Pre-market is down over 7%. And this another warning. I mean, I can't count. I literally cannot count how many warnings Morgan Stanley has sent out with regard to the market, with regard to the economy. But again, look, this is not any news to you or me. We understand the situation, I think, better than anybody else. And with regard to this market, look, the futures are lower right now. Not a good setup for the market, which I covered for you. Let's just see where this goes moving forward. I believe, sincerely, the Federal Reserve understand this. They are going to be watching the market like a hawk, as they always do, and they do have a trading desk. You can count on the fact that this market, this isn't a real market. I mean, let's clarify this. We have a market that not only has been propped up with easy money since the last meltdown here, and yes, we have inflation surging out of control, and the dog shit narrative again from the mainstream is, oh, it's peaking. It's just such I can't tell you how aggravated I get when I hear some freaking puppet out there being paraded out on any of the propaganda ministry channels trying to explain to you that, oh yeah, inflation is peaking, it's going to get better. Really, how do they pay these people enough to lie? I really want to know that. These people are prostituting themselves, lying to everyone. And, look, you and I have known this since day one. And, it's just an incredible thing, honestly. Anyway, so look, that's the story this morning. I don't like the setup for the market today. Doesn't look good. Let's see what kind of nonsense they pull off. Remember, the Federal Reserve has a trading desk. We have a market that has no bearing on reality, has not had any bearing on reality for a long time. No price discovery. There's nothing here. There's not a single asset today that has a real price discovery mechanism behind it. Nothing. So just keep that in mind. If you're in this market, okay, like I am, understand the one basic principle here is that it's all fake and nothing makes sense. All being propped up on the back of the biggest bubble the world has ever seen. And that bubble is going to continue to inflate. And I'm again referring to the global debt bubble. So, I mean, take due notice thereof and govern yourself accordingly. Anyway, all right, that's pretty much where we stand. All right, as always, I promise to keep you on top of this. You know I will. Anyway, with that said, people, this guy here loves you a lot. Please comment here. Let me hear from you. As I always say, I am not too old to learn a thing or two. So I do want to hear your perspective on what is happening here. We're stronger together. And I think, we've created, you and I, honestly, this entire thing, it's pretty big. It's a global thing. This blog, there's a lot of people here, and collectively we're going to help each other out as we always do. Love each other, care about each other, be charitable. This means, again, we got to come together. We got to, I don't know, just understand what's going on here and collectively look at this from many different perspectives, as I always at least try to do, and come up with the most likely outcome. You understand? That's all we are doing here. Do we understand, you and I, that eventually this entire thing is going to crater beyond anyone's wildest dreams? Yes. How many times have I said that the S&P 500 is going to fall 80% from its all-time high? There's no doubt in my mind that that is going to happen. But again, it's not in the stock market where this is going to start. It's going to start in the debt market. Period. The debt market is the driver. You all know that. It is the driver of the stock market. So what does that mean? The stock market itself, regardless of earnings, forward guidance, or PE ratios, or anything else that would make sense, because nothing is real anymore, the stock market is a derivative. It derives value from what is happening in the debt market. So realizing that makes it clear of what we should be focusing on. That again is that the debt market, more specifically the 10-year yield. You understand? All right, look, I'm really out of here. Love you a lot. See you later. Share the video, comment, and we'll put this all together later.